All right, hey, what's going on? This is Dan Keller, mortgage advisor at New American Funding, and today I have a really incredible guest that I think I might have met you about 3 years ago at a sales mastery conference, and we're going to be talking about credit repair today, just to kind of give my listeners a heads up. But Jeff Sipes is the owner of Blue Water Credit, and I'll never forget this. It was about three and a half years ago. I'm at sales mastery with Todd Duncan. And he's got all these top loan originators that were sharing their testimony on stage about their careers and what they do in their mortgage practices. And there was a couple of common denominators between many of these producers, and one of them was how they served their clients that may have missed the mark in regards to credit, and they all used Blue Water Credit. So I connected with you guys a few years ago, and you guys have just done a lot of positive things for some of my clients and made a big impact in my business. So it's a great honor to have you here, Jeff. Thanks for joining me today.
Yeah, you bet. It's my pleasure.
Awesome, man. So real quickly, Jeff Sipes is the owner of Blue Water Credit. He has been in the credit repair world for about 20 years. It's kind of great. Your testimonial is unique and such that you were your first client. So right? you operated on yourself first. But one of the unique things about Blue Water Credit is they are the highest rated credit repair agency in the country relative to Yelp and online reviews. And that's big because there are a lot that do not have great reputations, and I've used some of them. So the reason why I wanted to bring you on board today, Jeff, is I get a lot of clients that come in and they apply for a mortgage, and once I pull their credit, they're like, well, Dan, my credit score is much higher than what you've pulled. And without the proper expectation, there's some instant kind of friction, and it could impact a relationship that I have with a new client. So would you please explain why somebody with Credit Karma or freecreditreport.com that has access to their credit scores every single month on an app, why their credit pull is different, why their credit scores there are different than the ones that we are pulling at our bank, at a mortgage bank?
You bet. Yeah, so in the mortgage industry, Dan, the only credit score banks are using is called a FICO score.
Okay.
So it's a specific brand of credit scores. And last year, consumers spent over $1 billion buying credit scores that were not FICO scores.
Wow.
So Credit Karma, for instance, they have 60 million members now. And the credit score that Credit Karma uses is called the Vantage score. And the biggest difference between Credit Karma's score and FICO's is Credit Karma doesn't score a paid collection against you.
Okay.
So your Credit Karma score could be 100 points off from the FICO score that you pulled down.
Yeah.
So I use a cheesy saying, if it's not FICO, it's probably FACO.
Okay. Fair enough.
There's really only two ways to get that score.
Okay.
One, I always recommend is talk to your mortgage professional. So have your client speak with you, pull credit.
Okay.
And if they want to go to FICO's website, they can go buy their mortgage FICO score. It's $60 for all three scores.
Okay. Perfect. So you got to go straight to the source. You can get that. So basically what you're saying is the key word is the FICO score versus it doesn't really matter what Credit Karma or Free Credit Report says. Ultimately, if you're not getting a true FICO score, it's not a true score.
Correct. Yep. Exactly.
Okay. What was that analogy that you gave me before the call? It was like regarding Zillow and a Zestimate.
Yeah. So for those of us in the real estate industry, we understand that a lot of consumers are going online. Okay. And they're looking at their Zillow in their house, and they're looking at their Zestimate.
Okay.
Well, the Zestimate could be way high or way low.
Okay.
And these people are coming to the realtors thinking that this is what their home is worth.
Yeah.
And so the same thing with Credit Karma or these other credit scores. Your clients are going online, they're Googling credit scores, and that score could be high or low, off by 100 points.
Okay. Wow. And one last thing in closing, because I want to keep this kind of quick. Does it have something to do with the algorithm? I've kind of done some research on that, and you explained that to me, what the algorithm that the Credit Karma is using. Could you explain that? Because we're up here in Seattle where there's a lot of tech-savvy home buyers, right, that get that. Is there a specific algorithm that the mortgage banks use versus like Credit Karma or some of these online companies?
Yeah, so the algorithm FICO's using, they're looking at payment history, debt, credit inquiries, types of credit.
Okay.
Now, Credit Karma's score, they don't even factor in paid collections.
Wow.
So you could have 4 paid collections and your mortgage FICO score is in the 620s and your Credit Karma score could be 750.
Got it.
So it could be, way off in that remark. So the recipe is just completely different.
Got it. Perfect. Okay, so this was super helpful. I can't wait to share this info. I'm going to get you back. When you have time,
Awesome.
I'm going to get you back because you were telling me you have another like 3 to 4 minute clip on 4 tips to boost your credit score 100 points. And if you don't need 100 points, just 4 tips to boost your credit score, period. So, Jeff, thanks so much for your time, man. I look forward to having you back soon.
Yeah, you bet, Dan. Have a great day.
Okay, buddy. Take care.